In this video, I'm going to teach you how to analyze transactions. This video is great as it bridges what you learned in chapter 1, which is entering transactions into your accounting equation. Then in chapter 2, we're going to enter the transaction into our journal and then post to our general ledger. Let's do number 1 here. Receive investment by owner. Fast Forward receives $30,000 cash from Chaz Taylor in exchange for common stock. So the business receives $30,000 in cash. So does cash go up or down? Well, it goes up. So plus 30,000 under cash. Now, who has claims to that cash? Who put it in there? Well, the owner did. So we're going to increase the owner's common stock account plus 30,000. That's what we learned in chapter 1. Well, how are we going to journalize it into our journal? Well, we know that cash is an asset, and to increase an asset, we debit. So we're going to debit cash by $30,000. Now, also, we're going to increase common stock, 30,000. Is common stock part of aid? No, we increase it with a credit. So credit common stock, 30,000. Now what we're going to do is we're going to transfer each line to the ledger. First, we have a cash debit of 30,000. So we just go to our cash account and debit cash, $30,000. Okay. Now notice here that they have a cross-reference here. So once we do that, we put that account 101 here, right? Next, we do the second line, credit common stock for 30,000. So we look here, we got common stock, credit 30,000. And again, we want to make sure we transfer that number 307 back here. Let's do number 2. Purchase supplies for cash. Fast Forward pays $2,500 cash for supplies. Well, if we pay cash, cash goes down, right? So we put it here in our accounting equation. And why did we pay the cash? We bought supplies. So the asset supplies goes up. Now we know when we increase an asset, we debit. So we're going to debit supplies by $2,500. Okay. And then we know that when we decrease an asset, that's going to be a credit. So we're going to take cash, credit, $2,500. Can I tell you something right now that if you can remember that if you receive cash, you're going to debit cash. And if you pay cash, you're going to credit cash. Man, you're going to get a lot of good miles out of that, right? So write that down. You receive cash, debit cash. You pay cash, credit cash. A lot of your journal entries are going to revolve around cash. Number 3, purchased equipment for cash. Well, Fast Forward pays $2,600 cash for equipment. Well, if the business pays cash, cash is going to go down. So in our accounting equation, minus 26,000, right? Why did we pay that cash? Because we bought equipment. So our equipment goes up 26,000. When we increase an asset, we're going to debit, right? So we're going to be debiting equipment, 26,000. And then when we actually remember when we pay the cash, we know it's going to be a credit. So cash, credit. Just remember, if we are receiving cash, it's a debit. When we're paying cash and cash is going down like this, it's a credit, okay? Now, once we do the journal entry, we're ready to post to the general ledger. We do it one line at a time. Equipment, debit of 26,000. Equipment, debit of 26,000. And then here we got cash, credit, 26,000. So cash, credit, 26,000. Or purchase supplies on credit. Okay, so number one is fast forward purchases 7,100 of supplies on credit from a supplier. So what does that mean? You know, we bought the supplies, but we told the guy, I'll pay you later. So we're going to owe it, right? That's what it means on credit. We bought it on credit. Well, we know that supplies is going to increase, right? We're receiving the asset supplies, so plus 7,100. But we didn't pay for the supplies. We told the guy, I'll pay you later. So our liability goes up, specifically accounts payable. So accounts payable goes up 7,100. All right. Well, let's journalize this. We know that to increase an asset, we debit. So we're going to debit the supplies for $7,100. Now, how about the accounts payable? Well, that's a liability. And how do you increase a liability? Well, it's not part of aid, is it? So we're going to increase it with a credit. So credit accounts payable by 7,100. So there's our journal entry. Once we have that, we're going to post this entry one line at a time to the general ledger. We have supplies, debit of 7,100. We have supplies, debit of 7,100. This is just a copy job. Then we go to the second line, accounts payable, credit 7,100. Okay, accounts payable, credit 7,100. Let's do the fifth one, provide services for cash. Fast Forward provides consulting services and immediately collects 4,200 cash. Well, man, if you collect cash, well, you know you're going to, increase the cash account, right? Plus 4,200. Now, why did you receive the money? Because you provided consulting services. So you earned revenue. So it's going to go under the equity consulting revenue, 4,200. Now, remember, when we receive cash, it's a debit. When we pay cash, it's a credit. Well, here we're receiving cash, 4,200. So we're going to debit cash for $4,200. Next, our revenue went up. Now, how do you increase the revenue? Is it part of aid? No. So we're going to increase revenue with a credit. So specifically, it's consulting revenue. So consulting revenue, credit, 4,200. Once we get our journal entry, then we post to the ledger. We do that one line at a time. We have cash debit of 4,200. So go to the cash account, cash debit 4,200. Okay. Now we do the second line, consulting revenue, credit 4,200. Find the consulting revenue account and credit 4,200. And that's it. I think with that, you kind of understand how to analyze. The next video I'm going to do is going to be giving you a kind of complete problem of the journalizing and posting. So be on the lookout for that. Until then, we'll see you later. Bye-bye.